Welcome back. You're watching Chartbusters. Now, one pocket of the market that is definitely quite excited is the PSU basket. A lot of these banks have received additional money, additional recapitalization of 48,000 crore rupees. And the proof is on the screen. Corporation Bank is up 15%. Look at others as well, whether it's something like Dena Bank, Bank of Maharashtra. A lot of these stocks are up and about. So let's just break down the math and understand how this is working out. Abhishek is joining in with a lot of the details. Abhishek, I think the academic and the moral debate around additional recap will continue, but do run us through the numbers.
Well, the capital infusion of about 48,200 odd crores has been done in order to protect banks from going into PCA or bringing them out of PCA. So let's look at the list of banks that may come out of the PCA framework on account of the capital infusion. The first one is Corporation Bank. The capital being given is 9,086 crores. What this does is, as per our calculation, the Tier 1 ratio can improve to 17%. The net NPA is at 11.47%. To bring down the net NPA to 6%, the calculation shows that, this capital is sufficient. Look at Allahabad Bank. The capital given is close to 6,900 crore. As per our calculation, the Tier 1 ratio can improve to 12.6% versus 7.2% that was there earlier. So the net NPA is at 7.7%, and this capital does suffice, to bring down the net NPA below 6%. To keep banks out of PCA who can fall into PCA, two banks namely have been given the capital. One is Andhra Bank. The capital given is 3,256 crores. This improves the Tier 1 ratio to about 10.6 versus 8.3, and the net NPA ratio is close to 7%. Syndicate Bank has been given a capital infusion of close to 1,600 crore, which actually helps improving the Tier 1 ratio to about 10.6 versus 9.7. Remember that the net NPA ratio is close to 6.75%. There has been capital given to PSU banks, but it does not suffice to them, bringing down the net NPA below 6%. One is PNB, given a capital of 5,900 crore. Calculation shows that this is not enough to bring down the net NPA below 6%. And Union Bank of India, capital given 4,100 crore. This increases the Tier 1 to 10.5 versus 9%. The net NPA is at 8.3%. Despite capitalization, some banks will remain under the PCA framework. So one is Central Bank of India, capital given 2,560 crores. Indian Overseas Bank, 3,800 crores. You have UCO Bank, the capital given 3,300 crores, and United Bank of India, capital of close to 2,840 crores. Although two banks are already out of the PCA framework, but they have been given capital. One is Bank of India at close to 4,640 crores, and Bank of Maharashtra, the lowest capital given is to this bank at a mere 205 crores. Back to you.
Thank you, Abhishek, for that. And what will keep the interest in public sector as well as private banks alive will be the meeting between the RBI governor and the banking heads later today. Remember, earlier this week, the RBI governor had said that he will be meeting these banks today to discuss rate transmission and perhaps persuade them to pass on the rate cut benefit. But let's get back to this whole story of fund infusion into the public sector banks. Earlier, we had spoken to a whole host of bankers to get a sense of what they're making of this move and the kind of benefit it throws out. Hear them out.
As it is, you see our September, the latest results, we are not really breaching any one of the things, is that. So we are just closer to that. The capital is more for the likelihood of the aging provisions that would occur, which we have also indicated that. So that would be needed for that. Part of it would be used, but still we'd be having some amount of growth capital to go forward. So it's a very welcome thing that we got it at this point of a time, and I'm very sure that Andhra Bank, as we stated earlier, with a NIM of 325 and a consistent operating profit being at around 5,200 per annum. It's the ones with the aging provision issues goes on, and the slippages could be contained a little further in the smaller accounts, as most of the corporate accounts have fallen, and the further slippages in the corporate account is going to be very, very minimal. We think we are in a better placed position.
Sir, I know you're not facing the risk of PCA or anything per se right now, but with this capital infusion, how will your Tier 1, Tier 2 ratios change? What kind of, if you could give us that number as well?
See, exact number offhand I don't remember, but see, I'm already like around 7, something like that, so it will add on to that.
Okay.
Immediately the capital would make the ratios much better, but again, as I said that in the March quarter, we may have to make provisions for the aging. So, but still we would be very, right now my CRAR is around 11.17. I would be actually better off that capital, including the provisions that I would go for it. And the net NPA is already 6.99. Once you finish the March, it's going to down much further down.
Okay. So besides keeping money aside for aging provisions, will there be enough capital for growth? What sort of growth are you targeting for this financial year?
Yeah, see, like so far we have been growing, if you take Y-o-Y, around 10+ percentages. But a quarter on quarter, about 5 to 6% we are growing. And we are fairly very clear about it. We're going to grow on 3 parameters. It has to be a highly less risk oriented. So rated assets would be the most preferred one. At the same time, the pricing is also important for us. The bottom line would be another important area where I look at and pick up an assets. So the risk has to be priced return. And eventually this year on year, I would end up around 8 to 10% because of the capital as well as the provisions. Going forward, also, we would be growing with these parameters in mind. We won't be just growing for the sake of growing unless otherwise that ROE is acceptable to us.
Will you need any further capital beyond what the government has infused? Would you be looking at non-core divestments, for instance, to meet your requirements?
So as already we have announced in the stock exchange, that there is one non-core asset divestment plans are in the offing. Additionally, as I said, going forward, like I do make an operating profit every year about 5,200 crores. So that would add to the capital requirements for me to grow.
So, could you tell us what this asset is, how soon you'll be looking to divest stake in it, and how much will you be raising through that?
See, India Life is an asset which we have indicated to the stock exchanges that we intend to sell. And we do have about 30% stake in that company. And how much we sell, when we go to sell, depends upon the process as well as the valuations which we would like to get for that. So it is, you need to give us some more time to crystallize those answers.
Our PCR will be going up. We'll be using it to bring down the net NPA percentage. We'll be using 5.98. We expect it to come down below 6%. It will be around 5.99 or 5.98. As you know, our recovery, we have been following up on a regular basis. So far, we have been able to do around 4,600, and we hope another 1,000 crores also will be coming in during this quarter.
Okay, so those are different bankers reacting to all the additional money that they are getting, and several of those banks hoping to come out of the prompt corrective action framework of the RBI as well. We need to take a very quick break. On the other side, we put the spotlight on Dish TV. The stock is up about 6%. We'll tell you why as soon as we get back.